What you should know about GST? See, most of the time students face this problem that they don't know about the basics of GST. Today, in this particular section, in this particular class, you can say, I'm going to discuss all the important topics for the GST and which will help you to cover up the preparation. Now, GST types. There are 4 types. Central GST, that is CGST. Then we have state GST. Then we have interstate GST, right? And then we have this union territory GST. Now, union territory GST, all of you know, it is implemented like in Ladakh, like in Delhi, like in Chandigarh, Andaman Nicobar, and all those areas. Now, legal authority, if it is a state GST, it will be created, implemented by the state government. If it is central GST, it will be done by the parliament. So state legislation and parliament are the respective authorities who can create laws on their respective ideas. Now, those union territories that have, you can say, their own state legislations like Puducherry, Delhi, they can also create laws on that what items they want to include, what items they want to exclude along with the GST council. Now, apart from that, so one more important, very important thing, guys, state cannot create laws on central GST. Please understand that. Only central government, that is parliament, can create a law on IGST, CGST and UT GST. Central GST and state GST are imposed together. Yes, so whenever you see a bill, let's say you have purchased something and 18% of GST was implemented. Let's say you have purchased a mobile phone and there was 18% which was included as a GST. Now, whatever tax is being there, it is equally divided between the center and the state. Equally divided. So if it is 18%, you will get the total taxation that is going to be implemented. So tax imposed is 18%. Now, this is a composite scheme, right? Here, both center and the state are implementing the laws together, are implementing the taxes together. So they will decide, center will get, right, 9% and state will get 9%. Similarly, if the tax rate is 5%, 2.5, 2.5. If the tax rate is, let's say, 28%, 14 each, right? 14 to the center, 14 to the state. If it is 12%, 6 to the center, 6 to the state. This is known as a collective tax collection. Previously, central government taxes services and state governments could not tax services. Now, center and the state together are taxing the services in India. Now, given this, IGST, number 1, center and the state together. Please remember, the word is together. They charge taxes together but appropriated separately. The tax is imposed together as a 18%, but then they appropriate, that is, they keep their own respective share. IGST is to be distributed between center and the state in the manner it is provided by the parliament, because IGST is created by parliament. State cannot decide how it is going to be distributed. Now, what is IGST, what is CGST and SGST, we will discuss very soon. Parliament can impose cess and not surcharge on GST. Now, what is cess? Cess is a specialized tax collected for a specialized purpose. Like Kisan, this Krishi Kalyan cess, Swachh Bharat cess, education cess. They are collected for a specific purpose. So if government is collecting education cess, the money is going to be in the pocket for education purpose only. The money cannot be used anywhere else. On the other hand, surcharge means tax on tax. So let's say government is implementing 28% on GST. Then government can include certain surcharges if they wish. But look at this. Parliament can impose cess on GST and not surcharge. This is very important. Now, the point is that this cess, which is included in the GST. So that is how it is being done. I'll come to that, how it is being created. So just remember this line. Outside GST, crude oil, diesel, petrol, natural gas and air turbine fuel, that is ATF, they are outside GST. There is a law. The constitution provides that the GST Council can include this in future. Yes, there is a provision which says that these things, that is petroleum products, can be added to the GST in the future. Once added, there will be a uniform GST across India and uniform petrol prices. However, kerosene and LPG are already included. The first 5 are excluded right now, may be included in the future. The last 2, that is kerosene and LPG, are included. Center imposes excise duty and state imposes VAT. So the things which are outside the GST purview, right, that is crude oil, diesel, petrol, natural gas and air turbine fuel. These are the ones which are outside the GST. On this, center imposes excise duty and state imposes VAT. The same is true with alcohol also. So alcoholic drink are under the state VAT. It is not under the GST. That's why the alcoholic prices are different across India. Now, alcohol is outside GST, only states can impose taxes, as I've told you. It is also outside the GST. Additional excise duty, what is that? Is applicable on tobacco even after GST. Now, government has not named this as a surcharge. They are calling it as additional excise duty, and this is kind of a surcharge. It is not surcharge, it is kind of a surcharge. Surcharge directly they cannot impose. So additional excise duty basically means that government can impose a kind of a penalty. So this is kind of a penalty which government imposes after the GST. Any good or service not sold or consumed will not be covered under GST. Why? Because GST is a destination and consumption based tax. As it is destination and consumption based tax, anything which has not reached the final destination, anything which has not been consumed in the Indian territory is not covered under GST. Now let's understand this. The example is exports, even the items which are sold to the SEZ, special economic zones. So exports or special economic zones, exports to the special economic zones, guys, please understand this. Let's say there's a company which is known as Maruti. Now Maruti company has created cars, right? Let's say they have created 100 cars which are sold in Delhi. So these 100 cars were sold in Delhi. The rest 100 cars were to be sold in Sri Lanka. Now out of these two, which of them will be covered under GST? That's the question. Let me tell you which one. This one will be covered under GST because it is within domestic territory. It is domestic territory plus it is consumed in India. It is consumed in India. In this, it will be zero rated. What do you mean by zero rated? Zero rated means, of course, the manufacturer, that is Maruti, will have, I mean, if Maruti purchase some inputs, let's say machines, any electronic item, tires, steel, whatever they are purchasing, they will be paying GST on that as an input. So everything which they have included in terms of input will be reversed, right? Will be returned to them. So their net taxes, net payable taxes will be zero. So whatever taxes that they have included in the input will be given back to them by the government. They will be collected at first, but they will be given back. So that's a good news, right? Then, so exports are zero rated. This is the meaning of zero rated exports. Tax slabs, what is the ideal tax rate? 5%, 12%, 18% and 28%. All of the 4 rates are divided equally between the center and the state if they are collecting it together. Special rates for selected items. 3% if it is a gold, silver and diamond jewelry. 1.5% if it is with respect to the diamonds cut or polished, and 0.25 if it is on rough diamonds. Why? Guys, this is a specialized thing to promote export. This lower rate First of all, gold, diamond, silver is culturally very important for India. It provides a huge employment. And secondly, India has one of the largest exports of gems and jewelry. That's why to promote exports, their rates are being kept at low. Then GST compensation says this extra amount of money was imposed as per the law. Parliament cannot impose it. It was already under the law for few years, which was later on expanded beyond 5 years because of the COVID. Now, under this, extra amount was collected in the taxation that was given to specific states. This was on tobacco, aerated drinks, motor vehicles. This additional tax was only imposed so that the states which are shifting to the new tax regime, because previously they had VAT. So many of the southern Indian states, they had this issue कि as we are shifting to the new GST regime, they will have a loss on their revenue collection. So central government assured them, don't worry, we'll provide you compensation. So if you are supposed to collect 100 crores, you are collecting 80 crores, the rest 20 gap will be provided by the central government through the collection coming from GST compensation cess. Now let's come to the other dimensions, basically the core dimensions of GST. So here in this particular table, you will see what is the present status and what was the status before 2017, that is pre-GST status. So this single table will help you to understand all the dimensions of GST without any hustle. The first, GST is a one nation, one tax and one rate, which basically means that if you purchase a mobile phone in Jammu and Kashmir or Kanyakumari, or you purchase a mobile phone in Gujarat or Arunachal Pradesh, the tax rates are going to be same. If it is 18, it is 18 everywhere. And center and the states are going to divide this equally 9 and 9% each. Previously, there were multiple taxes. Every state had their own taxes. That's why people take the advantage of buying from a specific state. Then both center and the state decide respective rates. Here in the present GST, previously there was multiple rates because both center and the states were trying to collect rates according to their own choices. Now there's GST Council. It is known as fiscal federalism. It is the best example of cooperative federalism, and here both of them decides the rates as per the consensus. So they come together to decide a rate, and that is being enforced. Then one unified national rate, hence same price everywhere. So the price may differ as per the raw material, cost of production, value addition. However, the tax are different. Here, different rates, different regions, hence different prices. Now, destination-based tax. Destination-based tax means the tax will be imposed only if it reaches the final destination. That is, the good service which has been produced is actually being consumed. So it is consumption based, paid by the party using final goods. Anyone who is using a particular product as an intermediate will not be covered in this. In that case, the tax will be reversed. They will get input back. Previously, it was origin based tax. That is, tax was imposed on the party which was generating the goods, irrespective. So there were the chances that if a good has been produced and it is lying idle in the storeroom, right, in the warehousing or in the stocks, it has not been sold off, tax is still implemented on that. Three types of taxes here. Separate tax charged by center and the state. State had VAT, center has its own various taxes. Simple and easy compliance, very easy. Collection, appropriation, distribution, very, very complicated previously. It was very complicated. Plus, it is digitized also. So it is digital, instant. Tax is applicable only on the value addition and not on the inputs. Input tax credit is available. That is, let's say, there is raw material of something. So raw material is, let's say, so the raw material is wheat flour. Now wheat flour will be converted into final product, that is bread. So this is intermediate good, this is final good. Now according to GST, GST is implemented on the bread, right? So as it is implemented here, someone already paid a tax on this. So let's say shopkeeper has paid 12% tax on this wheat flour. Consumer is paying 18% tax on bread. Now this 18%, the actual price was 100. So the raw material costed to the shopkeeper was 112. Now 18% will be imposed on this 112. But what government will do now? Right? Government will say that this 12% will be cancelled out. Government will pay this back to the shopkeeper. And 18% will be imposed on the actual price. So the more value addition is being done, the more will be the GST, and whatever the tax was paid on the inputs by a particular person, by a particular seller, producer, manufacturer, service provider, that will be given back to them. This means cascading effect will not be there. So tax on tax, this was 18% was a tax on 12% tax already paid. So this will be avoided under the GST regime. So cascading will be avoided. Only value addition will be there. If value is added to something, then only tax will be imposed. If value is not added, tax will not be imposed. Each GST receipt is equally divided between center and the state. Previously, it was not the matter. Previously, collection, appropriation and its distribution was based on various agencies. For center different, for the state different, for the union territory it was different. That's why I said that it is more compliance related regime. Now coming to the difference. Center GST, state GST and integrated, or you can call it as this I can be also be changed with integrated or import or interstate, just to remember it. So integrated, state and center. Now these two are imposed together. That's why I'm putting a plus sign. These two are same. Their compliance is same. Their collection is same. They are distributed between the both parties. So they are imposed together. Center and state in intra-state, within the state. So this is within state. So this is the case. This is within the state. That is interstate, right? Between the states. So it is within the state, that is between the states. Governing authority, obviously under center, obviously under state. This is also under center. Revenue distribution, center, it will go into the pocket of center. So the tax collected under CGST will go in the pocket of center. Tax collected under the state will go in the pocket of state. Now this will be shared between center and the state as per the law created by the parliament, which I discussed previously. Law. It is as per the center GST law 2017, state GST law 2017, integrated GST law 2017. Example. Within Maharashtra or within Karnataka, or you can change the other example, sales of the goods going between Maharashtra and Karnataka. So sale of goods from Maharashtra to Gujarat or Karnataka, whatever example you can say. So that is between the state, within the state. So this is how this setup is all about. The same works with the UT GST as well. Now this is where UPSC has asked the question in the mains examination. So let's understand that. What state related tax have been included and what central related taxes have been included in the GST. Now central state related taxes are the value added tax, which was the largest share to the state before the GST. That's why they were asking for compensation. After this, entertainment tax. Please understand one thing, entertainment tax at the local government can be as per their choices. It is only up to the district level or at the state level, I would say. Luxury tax, tax on lottery, gambling and betting. So that you have this online betting platforms these days, they are part of this only. Octroi or the entry tax, if a person or if a good is entering a particular state, on the borders of the state they will be paying entry tax or the octroi, also known as chungi. This is not a toll tax, by the way. Toll tax is paid after specific kilometers for the using of highway. This is entry tax to a particular territory. Purchase tax on purchase of something, tax on advertisements, and central sales tax, central imposes, state collected. Central sales tax like VAT, it was collected by the state. So all these are now part of GST. What has been included from the center side? Central excise duty. Excise duty is imposed on the goods which is being manufactured and just come out of the factory. Once it is finally produced and coming out of the factory, central excise duty is being imposed. Then additional excise duty, kind of surcharge, not surcharge, kind of surcharge. These are additional because they are imposed over and above the existing ones. Similarly, additional custom duty, that is countervailing duty, it is imposed to prevent the trade from kind of a mispractices or malpractices. Additional special additional duty of custom, again kind of a surcharge. Service tax, excise service tax, which was not with the state government, now it is between both. And as excise duty levied under the medicinal and the toiletry preparations, which includes narcotic drugs, alcoholic, right, which contains alcoholic, narcotic drugs, but not alcohol. Basically something produced out of it for medicinal purposes. So all these kind of taxes are now under GST. And that's why they are both, center and the state divide them equally under them. Then important terms related to the GST. These important terms are, first, revenue neutral rate. Now the biggest question which was there while GST was implementing, that what if the total revenue collection to the specific states get denied or actually being reduced after the imposition of GST? What will happen in that case? That's the biggest question. That is, if all the states shift towards the GST, will there be a loss or not? So the question was that what should be the ideal average tax collection rate which will keep us at the same level of revenue generation? That is, what kind of a tax rate should be there which neither increase the revenue too much or nor decrease it too much. So it keeps it on the same revenue collection rate. So what rate should be that? So that is known as revenue neutral rate. So your revenue should be same as that they were before. Unfortunately, the revenue neutral rate should be 15.5% average, but it is 11.8%. So still government is sacrificing, both center and the state are actually sacrificing. To increase this from 11.8 to 15.5, a lot of tax rates should be increased. But given the country, given the present status, we cannot do that. Then comes a tax input credit, which I have already explained to you. If a person has already paid GST, if a manufacturer has already paid a GST in their inputs, so when they transfer the inputs into the final product after value addition, the tax they have paid on the input will be reimbursed by the government. So that is tax input credit. It is credited by the government back to the seller or the producer or the manufacturer. Inward duty structure. Inward duty structure is kind of a miscalculations. It's kind of a malpractice. It basically means that when the tax paid on the input is higher than the tax collected on the output. Because when taxes, let's say on input, the tax was 18%. On the output, it was 12%. So government is collecting 12%, but government is reimbursing 18%. So it's a loss to the government, a 6% loss. Then zero rated supply. Zero rated supply are the ones which are export and the sales related. So whatever I have paid as an GST, I will get back. Zero taxes. Nil rated supply. Goods and supply of goods and service with zero GST. Zero GST. Now, in the difference between the two is, in the first one, I am paying something, but I am getting it back. Maybe 5%, 12%, whatever. I am getting it back. 100% return. But here, I am not even paying anything. Here, it is zero. Then comes non-GST supply, goods which are outside GST, like we have seen petroleum products, alcohol and others. Reverse charge mechanism. Reverse charge mechanism is when GST shall be paid and deposited within the government by the recipient. Let's understand this. It's very interesting. Let's say there's a company which is known as Maruti. Now Maruti is selling a car. The car is Swift. And the GST on this car, I'm assuming, was 1 lakh rupee. Right? This is GST. This is your GST. Now here you have consumer or the buyer of this car. Now actually this GST of 1 lakh will be paid by the consumer to Maruti, and Maruti then it will pay to the government, because this is an indirect tax. Indirect tax means the one who pay is not the one who actually use the material. So the material was consumed, the product was consumed by consumer, but he is not paying the tax. Who is paying the tax? Maruti is paying the tax to the government. Maruti has collected 1 lakh rupees from the consumer in the price of the product, and then they have paid this to the government. Now reverse charge mechanism means what? Reverse charge mechanism simply means that Maruti will sell the product without GST to this consumer, and consumer will pay the GST to the government. Consumer will pay GST to the government, 1 lakh. Seems kind of impossible things, but at a larger scale this happens. At an industrial rate it happens. All right. So that's an important mechanism in this regard. Moving ahead. Now present status of GST, which was mentioned in the article. So let's take this very quickly. Now GST, the net of refunds. Net of refunds means what was returned back in the form of credit, input tax or tax input credit, is now around 12 lakh. So 2.5 lakh was paid in the reverse. Average annual receipt is 3 times the receipt of pre-GST period. So if before GST, that is before 2017, we were collecting 5 lakh crore. So now it is 15 lakh crore. It is 3 times. So GST overall has increased too much. Growth rate, however, is lower. So if previously, that is pre-GST, right, or pre-COVID, the growth rate was kind of, let's say 10%. So now it is 9% or 8%. So not too much decline, but it's less because of the COVID and shutting down of the many industries and structural changes. Collection to gross GDP ratio is yet to match the pre-GST. Too many exemptions are given now. So the collection is not up to collection to GDP. Collection to GDP. That is out of the entire GDP that we have like $4.2 trillion GDP. Out of this, how much is coming from GST only? And now please understand, in this, I would like to add up that indirect taxes are now less than direct taxes. This is very important, guys. Now in direct taxes, specifically corporate tax and income tax, they are taking higher role, higher share in the GDP compared to the indirect taxes. Hence the role of GST is declining and the role of corporate and income tax is increasing. Average annual growth rate of GST in the most lagged state is higher than the national average. Now which state I am talking about? Here I am talking about Bihar, I am talking about Uttar Pradesh, Madhya Pradesh. The rate of growth in these states is far more than the national average. So they are performing better in terms of GST collection. Let's see this through graphs. So as you can see, previously the average collection from the state, right, collection of this GST average, right, pre-GST is 3.73 lakh crore. Now it has increased to 14. Overall the average has increased, but it has declined, right? Here it has declined, right? Then average growth, that is growth rate of GST, 11%. It was growing average on an 11.8%. The growth rate has declined. Ratio with GDP, right? Ratio to GDP, that is GST tax in case of GDP, it was 6.3%, 5.7%. So GDP to, GST to GDP ratio, it has declined. Tax buoyancy, that is how much tax increases with GDP, much faster, lesser, right? Now this is very interesting, guys. Look at Bihar, UP, Jharkhand, Madhya Pradesh, Chhattisgarh, and look at their average. 13%, very high. 11, almost 11, 11, 14, 13. It is higher than the national average. So the poor states are showing better results on GST as compared to the richer states. So their growth rate, one of the reasons because of this is base effect. Because they are growing at a lower base. That is, the previous data is far less in these states as compared to the next data. On the other side, Gujarat, Maharashtra, Goa, Punjab, Tamil Nadu, industrialized states, agricultural states, richer states, they have higher base. So previous year was already high. That's why this year the growth rate may not be very high. In absolute terms, obviously they are low. So here I am leaving you with these two practice questions. You can pause the video and you can go through this specific question on GST as well as the second one, which is this prelims related practice question. Not only this, I am leaving you with this mains related question on GST. So enumerate the indirect taxes which have been subsumed in the GST in India. Also comment on the revenue implications of the GST introduced in India since COVID period. So the tables, the data that was mentioned in the news article, you can use that to understand more. If you are still here with us on this video, I hope to join, I hope to see you in my batches. So the link is given. I'm floating a batch for specialized general studies economy. The prices is 5,999. The contact number is mentioned over there. The details, the link to join this is mentioned in the description box. All the details of this course are mentioned on the screen. This is going to be the most detailed discussion of economy. Do join me and learn from the best. I am Jateen Bharadwaj. I'm an assistant professor of economics. I am one of the highest scorer in the Civil Services Examination, in fact in the optional paper as well. And I believe in teaching the most detailed discussion curated only for the UPSC examination. I hope to see you very soon in this course. Thank you everyone. Do subscribe us, join us for the next update.